Hello, all you beautiful people, and welcome back to the Mike Faraci Show. Today, I'm talking to the mortgage loan originators out there. Maybe a little bit to some real estate agents also, but mainly mortgage originators, because we're going to talk about some mortgage product and how you can leverage it to actually sustain your business through these tough times. Maybe even build it a little bit. It's a concept that honestly has been inspired by another podcast that I just recorded. My other podcast called Fly the Flag, sponsored by American Financial Network. I had our leader, the person who runs our construction and renovation division on, Bruce Smith. It was an awesome pod. Check it out if you want to. But we were talking about construction and renovation loans and about how so many loan officers are kind of scared of them at first glance and just really not willing to step outside of their comfort zone to tackle those loans. So he's built a division to service the entire company. If somebody has a construction or a renovation loan, his division just kind of takes the lead and takes charge on it. So that way all the loan officers don't have to. But I'm here to tell you that that doesn't have to happen. No matter what company that you're at, that doesn't need to happen in order for you to get these loans done. You just need to set some proper expectations and kind of know what's coming. Just anticipate some things. Don't overpromise. Is very much a underpromise, overdeliver type of thing when you're working in these niche programs. But these niche programs can save and even build your business. I call this concept loan program arbitrage. It's an arbitrage, legitimately. It's finding something that is undervalued in your market and taking advantage of that, exploiting it even to grow your business, to gain realtor relationships, to go direct to consumers with this education and help some people out. And I have a top 3 for you. It's a top 3 arbitrage opportunities for late 2022 as we move into 2023. If you embrace these opportunities, you will get business out of them. It might not be overnight, but what is, really? Nothing's that easy, otherwise everybody would do it. The first arbitrage opportunity I want to talk about is kind of what we just mentioned with construction and renovation loans. More renovation loans than anything. It's the Fannie Mae Home Styles, the FHA 203Ks. These are the programs that allow a borrower to take out a first mortgage, and within that first mortgage, finance planned improvements to the property. Now, with the big full 203K, you can actually take a house down to its foundation and rebuild it. So there's not a whole lot that you can't do with these. But for now, just to kind of get a taste of these things, let's focus on the simpler side of renovation. What are the most important parts of the home? It's kitchens, it's bathrooms, common areas, possibly backyards, pools, if you're in a warm climate area. These are different things that really sell properties and cause properties to sit if they're not up to maybe current standards or at least standards for the area. But a renovation loan is a way to include the cost of that remodel in with the purchase mortgage. These work with refinances as well. With a refinance, it's extra cool because you're actually taking cash out of the property, but because it's already allocated back into the property, they're not priced like cash out refinances. It's priced like a rate and term refinance. And you get all the rate and term max loan to value percentages and things like that. So you're not as limited when you do this as a refinance, but super beneficial for purchases, especially right now when houses are starting to sit a little bit. Not for a long time, but there's less buyer competition out there, especially in the wintertime. And people are looking at homes that, I don't know, maybe they're starter homes. Maybe they're not up to snuff for the area. Maybe this house would be perfect if it had an open concept or if it had that chef's kitchen. I hate that term. It's just a really nice kitchen with some with some cool countertops and nice appliances, right? You can do this for people through a renovation loan. The best renovation arbitrage I've ever seen was a loan officer in a warm climate area here in Southern California who marketed themselves as the pool man. That's just what they did. They specialized in renovation loans to put pools in backyards of properties that did not have them. He marketed himself as the pool man. He made renovation loans his specialty. He knew them in and out, which doesn't take a whole lot. The guidelines are all there for you to read. But he set proper expectations and absolutely knocked it out of the park anytime he had the opportunity to do a renovation loan for someone. Well, word gets out about the pool man, and the next thing you know, any realtor in a remotely close vicinity who was working with a buyer who wanted a pool knew that they could show that buyer any stinking property they wanted to. Because by referring that buyer to the pool man, they were going to be able to take any property without a pool, sell it to the buyer, and the buyer was going to be able to use that mortgage loan officer in order to get a loan that financed in the cost of building a pool. And not only do they get a pool, they get exactly the pool that they want that way. Think about Amazon. I know, not a super smooth transition, but we're talking about arbitrage opportunities here. Amazon, when they first started, saw an arbitrage in books. The main way you could buy books is to go to a bookstore. They saw that as inefficient, and they wanted to do it online and a whole lot better and make it even cheaper for the consumer. So they did. And they did books so well that client base, their consumers who bought books from them, all but demanded that they start selling other products also. This is what can happen to you if you find a loan program arbitrage in your mortgage business. Because the pool man didn't exclusively do renovation loans. That's just how he marketed himself. He did so many successful renovation loans for so many clients who were so happy with his services that eventually they demanded that they do a conventional refinance with him. They demanded to be able to send their uncle to him to purchase a townhome or a condo because he found the arbitrage. He found the undervalued product in his area. He exploited that. He made himself the place to be for that product. And the referral business just came pouring in, whether it was a renovation loan or not. It didn't matter because he had everybody's needs covered, all by embracing a program that other loan officers in his area were gun shy about or scared of because they just didn't know the product all that well. Second opportunity for arbitrage. I'm going to go to camera 2 for this one because I want you to tell me what camera angle you like better. Do you like seeing the other camera and some of the cacophony of cables that I have going on here? I'm not sure. We're going to try this camera angle for a little bit, and I want you to go down into the comments if you're watching the video version of this and let me know what camera angle you like better, because maybe I flip them. Maybe this is camera 1 and this is camera 2. I'm not sure. I kind of like this one, but you might like this one. I'm going to keep both options for a little while. Let me know what you like. Second opportunity for arbitrage, loan program arbitrage, right now, right meow, so to speak, is with investment properties, and it's with non-QM programs. Now, if you're not at a lender that has a good non-QM offering, get yourself to a lender that has a good non-QM offering. Get access to it somehow, some way, because this is a market that you could explode into because there are tons of loan officers who are still lamenting the fact that they can't roll out of bed into a pile of refinances. That's not you. You're on the cutting edge of these things, and you know about DSCR programs. That's our second loan program arbitrage option for you these days. Late 2022 going into 2023. And I've been talking about this one for a couple years. People still aren't really embracing it, and I'm not sure why. DSCR program stands for Debt Service Coverage Ratio. If you're not familiar with them, this takes commercial lending mindset and brings it to residential lending. So now, instead of having to provide all the friggin' taxes and income documentation, if you're buying an investment property, you qualify based on the merits of the investment, which is exactly how commercial property has been done for decades. It's about time we have this option in residential lending. So on a DSCR program, when you go to qualify somebody for that purchase, it couldn't be more simple. If the rent that the property is bringing in covers the proposed mortgage payment, you qualify. It's that easy. I mean, you're typically looking at anywhere between 15 and 25% down. You're looking at minimum FICOs in the 620 to 660 range. It all depends on the specific product that you have access to. But being able to buy an investment property without any income documentation is huge, humongous. Let's be honest. This is something that property investors have been looking for a long time. And this isn't just for purchase loans. No, you can do refinance loans, rate and term, and cash out. Because let's remember, once you're able to do a successful loan for a property investor, it's probable that they're going to have an investment portfolio. So who do you think that they're going to come to refinance all the rest of their investment properties? Oh, no income documentation. This loan officer made it so easy for me. I'm just going to go back to them and refinance these other 5 properties. It's built-in referral business. It's built-in repeat business. And as a loan officer, you're probably out there networking. You're probably trying to build relationships with realtors, which I'm not huge on these days. I feel like the tangential professions are a more effective use of your time. But if you are out there building relationships with realtors, make sure that you tell them you have access to these DSCR, these non-QM programs that allow investment property transactions with no income. Because there's not a whole lot of mortgage loan officers that realize that when you're talking to the real estate agent, you're not talking to a referral source when it comes to these. No, you're talking to your client. Absolutely. When a good deal comes up in an area on a property that is ripe for investment, guess who the first people who see those are? The real estate agents. That's why so many real estate agents own investment properties. They find the good deals before anybody else. And if they know that you're the one who can make sure that that loan closes quickly and easily and efficiently with no income documentation, it's a light package, it couldn't be an easier loan to process, then you're the one who's going to get those transactions. And referral business will never come easier than from a real estate agent that you've done successful loans for. If they trust you with their business, of course, they're going to trust you with their client's business as well. So these are all things that you can dive into when it comes to the renovation loans, the investment property, the DSCR programs. These are undervalued loan programs in today's market that present options for you to take advantage of. These are opportunities, arbitrage opportunities for you to gain a stronger foothold in your market and actually grow your business through the slow winter season as rates have soared. You can beat the odds and you can do this. We're going to head back to camera 1 for arbitrage opportunity number 3. But before arbitrage opportunity number 3, you know what it's time for.
Hat of the day. Ooh, I love hats.
I do love hats. What hat am I wearing today? This is actually a hat from yesteryear. It's from an old company that I used to work for. It's an old logo that doesn't exist anymore. I spent good time here. Very good time. I had a lot of fun. And then we had to move on. And that's okay. Because it came with a nice hat and a nice hoodie. Honestly, the reason that I'm wearing all this today is because it's cold. I'm in the corner of a garage with no temperature control and concrete floors. And it's chilly in Southern California today. Actual chilly, like 53 degrees chilly. Don't make fun of me. Not Southern California chilly. I'm not saying that it's cold. I'm saying that it's chilly. And for us thin bloods out here, it's pretty chilly. And this is about the warmest and most comfortable hoodie that I own. So I'm wearing it today and remembering times past, good times past. Okay, so where are we? Number 3, program arbitrage. Number 3. There's a couple of ways that we could go here. We could go with another non-QM option in bank statement loans. Do you want to be the mortgage loan officer for entrepreneurs? Do you want to be the mortgage loan officer who truly empathizes with and understands self-employed borrowers? So much so that you've become the expert in bank statement loan programs because you get that they make more than they show on their tax returns. And you have an option for them to qualify for a loan on a home that they live in or that they're investing in with no tax returns. You're going to let them show their bank statements so we can go off what they actually bring in. Because a self-employed person who claims less than they actually make on their tax returns is just somebody who is using the system that has been given to them to use. They're taking advantage of all of those deductions and everything that they're supposed to be taking advantage of, to the point to where those tax returns aren't an accurate depiction of their actual cash flow. So let's look at the cash flow. Let's be the loan officer for entrepreneurs, for self-employed business owners. I got you covered. And your family and friends, we have them covered too. That's another pitch that real estate agents are going to love because a lot of real estate agents operate that way. Or maybe we want to be the loan officer for people with credit challenges. That's a long game play. Do you know how credit works? Can you help people get their credit up to a point to where they qualify for a mortgage, even though they don't qualify now? This is taking buyers and creating them from people who weren't buyers before. Do you have a 550 FICO score? No problem. I know how to get you up to 580. Do you want to be the loan officer who is the credit coach, the person that guides people into a mortgage loan by helping them improve their credit, by actually being the only loan officer who doesn't blow them off because they don't qualify for a loan right now? That's a huge program arbitrage opportunity. It's not even a program. It's just being a professional. It's just giving people good advice. I love that play. I love that strategy of being a credit coach, really helping people build into being a homeowner, because not only is it helping a bunch of people who need the help, and let's face it, they're underserved by the mortgage industry as a whole. Most people get a soft pull or they run credit and they see a score of 550, and then you know what that borrower gets? They usually get the copy paste reply of how they can improve their credit and give me a call when your credit score is up. But if you give them more than that, who do you think is going to get to the table? Who do you think is going to get the first at bat to go ahead and do that loan for that person when they are ready to buy a house? I love it when people talk about being the credit coach. I love it when people talk about being empathetic to entrepreneurs and self-employed business owners. So I guess that was kind of a 3 and a 4. Those are 2 more arbitrage opportunities. What do you think? What have you found to help in your business? Anything? Have you found anything to help in your business, or are you just trying to bang your head against the wall and stick to conventional and government financing? Are you just continuing to try to look for refinances where there aren't any refinances? Or are you actually being creative and stepping outside the box and trying to cultivate business in, I don't want to say a non-traditional way, because these are pretty traditional loan programs, but maybe it's a more difficult way. It's not as easy as letting a refi fall into your lap. So a lot of people are going to be more adverse to doing things this way. But if you put in the extra work, the business is going to come, because there's not enough people out there doing it. These are all underserved markets. What about first-time home buyers? Everybody loves first-time home buyers now, but 12 months ago, a first-time home buyer meant that the average loan amount is lower and I'm not going to make as much money as a loan officer. Seriously. There are so many people out there that think that way. Lower loan amounts, I make less money. So what? So what? We should be serving these people all along. Be the loan officer for first-time home buyers. Be the loan officer for entrepreneurs. Be the loan officer for people who don't even qualify for a loan right now, because you know you can get them to qualify for a loan 6 to 12 months from now. Work on that future business. Renovation loans. Maybe you don't want to be the pool man. Maybe you want to be the mortgage chef, because you specialize in getting people kitchen remodels refinanced into their purchase loan. Not refinanced, financed into their purchase loan through a renovation loan. And that lets you align yourself with builders and general contractors in the area. These are building your circle of influence. Can't talk today. A little sick. It's okay. Building your circle of influence. Building your referral sources. If you were just an expert in renovation loans and you knew how to get them done efficiently and quickly, then all of a sudden you don't have to go out to realtors to build referral sources. You can go to roofing companies. You can go to general contractors. Heck, you can go to places like Home Depot and Lowe's, anywhere that does remodels. You can go to flooring companies, painters, all sorts of different places. Do you know how many people want solar but can't afford it? But they could afford it if they could finance it into their mortgage and not through a cash out refi. No. A renovation loan is actively building equity in your property. For those of you who don't know about these renovation loans, when you provide the bid packages to the appraiser, because that's part of what you do, the appraiser is going to appraise the property with an as completed value, as if all of those changes have already been made. So not only is the borrower going to know that they're going to have the equity in the house to cover this, which is why they can finance it into the initial transaction anyway, but they're going to know just how good a place is they're putting their money in the property. Because if a $30,000 kitchen renovation adds $50,000 to the value of the home, they just built $20,000 of equity in that property for nothing out of their own pocket. It's a pretty amazing program when you really think about it. You're financing the future equity of the home into a purchase or a rate and term transaction today. It's awesome. And people can get so many things done to the house, like I said before, including tearing it down to the foundation and completely rebuilding it if they want that house to be totally different. I mean, this is not just HGTV stuff. This doesn't just happen in the specials on television. This is real life stuff that could help your business along. Please, I beg of you, pick a program and learn it. Pick something that you don't know. Pick something that you're a little gun shy about. Pick something that you're scared of. As a mortgage loan officer, if you can learn to effectively utilize a program that most other loan officers try to stay away from, you will benefit from it, because there is a need for that program, and there's probably a need for that program in your market. So fill those holes, and that's just going to take the ups and downs out of the roller coaster of this industry for you.